Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
All right. See, let's get this old sound down to a manageable level. All right. What's going on? I've got, this one is coconut chocolate, but it's not hot chocolate because that really did not work out. That hot chocolate, I think that's just too much sugar. That just lets the cursing machine, that's just like feeding it money. That's like one of those gambling machines. You just give it like $200 and you're on a nickel slot. You're going to be there all night. You don't want that kind of heat. Nobody here wants that kind of heat. All right, what's going on? What's going on? Here, let me get back to here. Hello. What's about an English accent that makes me want to watch a documentary? I know, right? Either that, but and even their regular shows, you're not sure if it's a documentary or not. Like it might be. Like that guy's got laser guns. Still could be a documentary because it's British. And no matter what a British person says, it sounds more right than us saying it. It just sounds like it's got to be correct compared to what we're. Even if we say the same thing, if someone says it and they're British, you're like, yeah, he's right. Like. It's the same thing I said. Like, no, but the way he said it was more real. Got it. I guess they still got that. They still got it. Hello. Oh, what up? Pop One fam. Yeah. Man, I haven't played in a week. I haven't played Population 1 in a week because this will sound stupid, but my wrist was hurting. I don't know if it's Population 1, but man, right here, my wrist was hurting. I guess from doing like 10,000 times an hour this. Like, anyway. Ow. Let's see. Haven't seen the soccer show. Oh, yeah. Well, this one's not the soccer one. This is like this is from old mechanic racing. It's like an old racing team shirt, but it's not really dirty. It has little gray bits that make it look dirty. But I have a new jersey. My buddy got me a not United, a Manchester City jersey because I'm a United fan. So that's a real dick move by him, but I appreciate it. But it's like from the stadium. He went to the stadium and got the jersey at the stadium. So that's pretty cool. 3 more days of Biden. Do you see the SEC? I mean, I don't know who to root for. The douchebags over at Ripple or the SEC. I thought it was great. This is where I'll give the Ripple community kudos because they like to throw money away. That's for sure. And they like to give crooks their money. But The SEC filed they had a few hours before their deadline for filing their notice, I guess their brief in support of their notice of appeal against Judge Torres's decision, part of the decision in the original Ripple ruling. Remember, there was two parts to the case. One, do institutional sales violate securities laws? And they were found guilty of that. Yes, they're waiting a determination of what the fine is going to be. The second part is, do secondary market sales constitute a securities contract under the Howey Act? Basically, do secondary market sales, because what the SEC was contending, it's a good argument. I know everybody doesn't want to hear this, but the SEC's argument in this case is a good one. Ripple, the company, always pumped the token. Publicly and everywhere else. They always talked. And if you bought that token, you were clearly waiting on the efforts of Ripple, the company, to make you money. No question asked. Like, not even a little bit. There's no wiggle room here. And I'm kind of surprised that Torres answered the way she did. But on the other side, anyway, so it was that secondary market sales part. Again, that's not a Ripple specific thing. It's that secondary market sales don't constitute an investment contract under the Howey Act. But some of the prongs of the Howey Act make it really sticky. I mean, if you're waiting for profit based on the activities or actions of the issuing entity, it's a security. So it's just very weird. And I think what's going to have to happen is there's going to have to be a restructuring of the Howey Act, not a restructuring of the SEC or the arguments around that. But anyway, in this case, I think the SEC is right and wrong. But they filed their brief in support of their notice of appeal, whatever. And on the same day, basically, Stuart Alderati, I guess that's his name. He's the chief legal counsel for Ripple. He just came out and said, this is all going to be dropped with the next administration. So maybe they gave a big bag of money to the Trump administration or something like that, because the Trump administration was not big fans of Ripple. Ripple supported Kamala against Trump to the tune of more than $25 million. They were not buddies. I know Brad's going in there and shoving his head all the way up the administration's ass ever since then, but they do not like those guys. Matter of fact, most of traditional banking, for obvious reasons, does not like Ripple, but they specifically don't like Brad and Chris because they think they got rich on the necks of XRP holders, which they did 100%. But the question is, did they break the law to do it? And I think they did they got found that they did break the law with their institutional sales. But that secondary market sales does not break the law, does not violate securities laws. So that's where we're at. But anyway, the XRP community came in and bought up the token. It's like they're up 10% today on news that the SEC is continuing to fight their case, and they're appealing the one part of the case that the judge found in favor of Ripple. And again, this isn't in favor of Ripple. They weren't saying Ripple is good. They were saying you didn't break the law. It's a little bit different, right? It's not like, hey, what you did was good. It's what you did wasn't technically illegal. This other part, you did violate the law. You guys broke the law. And remember, there were originally fraud cases. I think it was fraud against Chris Larson and Brad Garlinghouse, and they got dropped, I thought, as part of a proffer agreement or something like that, where they were going to kind of reach a settlement. That's why I thought a settlement was coming. I was like, why would you want to go through and fight this and fight this and fight this? But whatever. Anyway, here's where we are. Good job on the Ripple community, or the XRP community, for buying up a token after the SEC formally said it is our job to take you down. So what a big FU to the outgoing SEC. So you know what, Ripple community, you guys are a bunch of fucking morons, but I applaud you. I applaud you, dummies. So cool. And I am glad that at least I know some people that got into XRP when it was in the high threes. And they're like, at least they're like licking their lips, like, oh, it's been 7 years. Maybe I can get my money back. I'm like, yeah, well, minus inflation. You need like $5 out of that thing to get your money back. But you know what? Good for you. I think I'm glad when people get their money back. Let's see. I'm not seeing a difference in what Ripple execs did and what bank executives have been doing. I mean, there are enormous differences. Most banking executives don't break the law. I mean, don't obviously break the law. They might inobviously break the law, but they don't obviously do it. What Ripple executives did was obvious. I'll explain to you the situation, crypto, because maybe you don't get it. They sold their buddies XRP. First of all, XRP, the token, was created by Jeb McCaleb, who also created Lumens, who also sold MT Gox to Mark Karpellis right before it got hacked. So he bounced his way over here. So Brad and Chris didn't create anything. Nothing, zero, zilch, nada. They have done nothing of service. This dude, Jeb McCaleb, is who's created all this. He created 100 billion XRP tokens, and then he gave up like a billions to himself. Brad got some, Chris got some. They offered David, I'm not Satoshi Schwartz, some tokens, and he said, I don't feel comfortable about that. So he's the only marginally decent dude among that group of crooks. So Jeb McCaleb bails. He says, I don't like these guys. They're scummy. I'm getting the fuck out of here. And he goes over and he seeds the Lumen project. So and that's why the Lumen token and the XRP token are very similar. XRP and XLM, very similar tokens. And they have very similar use utility and not adoption because no one's fucking using either of them. Doesn't matter. Anyway, Jeb McCaleb bounces with all his tokens. They come up with an agreement. He starts selling his tokens. Plu, if you can't hear me, I don't know. If anybody else can hear me, then it's on you, Plu. Anyway, so Jeb McCaleb bounces. He has so many tokens and he's selling them so fast that the XRP community panics. And when they panic, oh, no. Remember, I haven't even gotten to what they did that was sketchy yet. This is all the sketchy shit leading to the sketchy shit. We're not even at the sketchy shit yet. So McCaleb bails. They create an agreement for him to only sell his tokens at a certain pace each month. Then there is some worry about the fact that these three yahoos have 100 million, have control over 100 million, or minus Jeb McCaleb's tokens. Let's call it 85 million tokens. And they have this big pile of tokens, and they're worried. They're like, wait a minute, why do you guys have control of these things? Oh, by the way, the shareholders that own shares, that own stock in Ripple, they were not offered any tokens. They did not participate in the vote. They did not get any tokens when they were made. It was simply to the executives. It was just a way for those guys to get rich. So they gave themselves the tokens. Now, Ripple, the company, realizes, the only way we make money is with these tokens. We don't actually have a real company. We don't make money. No one uses Ripple services. Not really. And we have all these people. Now, on the other side of it, just real quick, I'm glad that Ripple's doing what they're doing. The company, it makes a lot of sense. Like kind of forming these payment gateways and trying to get out of the SWIFT system and all this. It makes perfect sense. I think there's value there. They haven't struck gold yet, but at least I like what they're doing. And I liked it back then. I invested in it. I made a lot of money. Now, keep going. So Ripple takes all of those tokens and rolls it into what they put it into a rolling account that releases basically a big giant pool that they can't touch. And every month, so it was somewhere around 55 billion, the escrow, whatever. So this big account that holds these tokens, and every month it releases 1 billion, a billion XRP. A billion, because they minted 100 billion. Okay, so they release a billion XRP. As they release that, Ripple, the company, can do whatever it wants with that. Well, what do you think they do with it? They sell it to all these fucking morons who support them like they're a cult, because it is a cult. They sell the tokens, not all of them, but lots of them, to fund various parts of their business and to make payroll, because Ripple doesn't make money. The way they make money is selling you idiots their tokens. I don't know why this doesn't resonate with people. So that's their business strategy. You, not you here, but you who can hear my voice, who keep buying XRP, don't you understand XRP is their product? They don't, the company's not doing anything. Anyway, so they sell those tokens each month to fund business operations, to do whatever they want to do. Great. Whatever's left, supposedly, they put back in the escrow and it goes to the end and it continues to roll this out. So this will continue until the tokens are depleted, utilized, gone, whatever. So they still have billions, tens and tens and tens and tens of billions of tokens at their disposal that they get to use. And when these idiots out here run up the price, they're running up the price so that the people at Ripple can sell those tokens. No one else is using them. The great reset is when people fucking wake up to the fact that they're the ones financing these assholes. It's mind-numbing, but none of that's illegal. What was illegal is when this all started. The SEC case was, you guys violated Securities Acts in a variety of ways when you promoted the token to non-accredited investors, when you promoted it as, we're going to do all this stuff and you're going to win because we're going to make the token go up 589. Oh, it's kind of bullshit. The token should be worth this much, blah, blah, blah. All this stuff. Okay. And there's a bunch of math, by the way, that supports the fact that if XRP was out all over the whole world to do everything that they claim they want to do, the token only needs to be about $3 or $4. And then you would have sufficient liquidity to do everything they would have. And so there's no reason for a $40, $50, $100, even a $10 token. Now, could people bid it up to that? Maybe, but you're talking about the law of large numbers with the big market cap and trying to move things that far. It's not super likely, but people are stupid. And also, a lot of those tokens are still locked up in that rolling escrow. So, here's where the sketchiness is. These guys that got their own tokens, Brad and Chris, they sold tokens at a discount quietly to institutional investors. A discount from what you can buy it at, right? So, Joseph or David or Steve, if you guys want to buy the tokens, you would pay $3, let's say. The institutional investors would pay $2.10. And you would say, cool, well, I guess if they believe in it and they're going to have some lockups. No. There's no lockups. They can immediately go to the market and sell it. And guess what? They were doing it. And Brad's lying motherfucking ass got on CNBC. Oh, I've never been more bullish. I'm super bullish. It was like one of these conversations where he said, long XRP. I think he said the word long. Like it was this ridiculous. You can look it up. It's on CNBC. This interview. I think it was a CNBC interview or Bloomberg. I think it was CNBC. Anyway, I'm long, super long, blah, blah, blah. It's going to be amazing. The same day he had sold to institutional investors, millions and millions of tokens at a steep discount that were being sold against the market right then. So, cool. Oh, yeah, I'm long. Well, what about 4 minutes ago, motherfucker? Oh, I wasn't long then. No, then I was selling every fucking token I have. And if someone's on the inside and they're selling all their tokens, okay, 2%, 3%, live your best life. 10%, go buy a yacht. If you're selling everything you got as fast as you can at discounts, then you don't fucking believe in what you're doing. And this is what they were doing for months. And they got busted. And that's how all this started. And there's a lot of lawsuits and all this kind of stuff, and eventually it ended up in federal court. So that's it. So then when the judge went through it and said, yes, oh, by the way, This whole part of them selling at a discount, they didn't get in trouble for that. Or if they did, those charges were dropped. I think there was fraud charges, and then the charges were dropped against Brad and Chris, which I think was, that part right there was suspicious to me. Now, any good, competent leadership, when all this went down, they would have both resigned. They would have fallen on their swords and resigned so that the XRP community didn't get dragged down in the mud with all this bullshit. Because the only people that really lost, it was not David, it wasn't Chris and Brad Garlinghouse. Those guys got rich. I mean, rich, billionaire rich, undeservingly billionaire rich. So they get super wealthy, quasi-legally, mostly illegally, whatever. And the people that get punished are the people that bought near those highs of 2017, early 2018, because it still hasn't reached those highs. They lost the 2017 bull market run. They lost the little blip in 2019. They lost COVID, the COVID run, the funny money run, 2020, 2021. They lost the AI run in 2023, and they lost 2024, the Trump pump, both Trump pumps. They're still not back to even. Those guys missed every run you could have. Those guys missed it for 7 fucking years. They missed it. They just got to sit there and watch because Brad and Chris want to line their fucking pockets. Now, in any situation, in any traditional, this is why I was comparing it to banks. At least in a situation with a bank, those executives would have fallen on their sword. They would have resigned. They would have left. Oh, my bad. You know, we didn't. We're moving on to new things. They would have fallen on their sword. These motherfuckers, these smug assholes over at Ripple, no. Well, you can afford to do that when you just made yourself a billionaire off of the backs of a bunch of dumb investors. And that's what it was. I guess that's what makes me mad. It doesn't make me mad that they pulled a scam. All these dudes are pulling scams. Do Kwon pulls scams, all this kind of shit. Celsius, of course, all those guys are in jail, right? Bankman Fried Chicken, CZ, Sleazy CZ. Why do you think we call him Sleazy CZ? The mother scratcher's dirty. He's always been dirty, but he's not a crook. He's not a thief, right? Bankman Fried is a thief. Caroline is a thief. Celsius, Alex Mashinsky is a thief. Do Kwon he's a fucking thief. They're crooks. These guys are just dirty crooks. The guys at Ripple are thieves. They stole from you, from everyone that has ever owned one token. They stole right from you. And then every single day they stay in their jobs, it's a fuck you to the entire XRP community, which, for whatever reason, supports them. It's madness. So I guess that's my only rub. But on the other side of it, I can't hate too bad because I do like what Ripple, and to an extent what the Stellar Foundation, I do like what they were intending to do. But when you ask yourself, when you look at a token, you say use, utility, wide scale adoption, hoarding effect, and what would dummies do? Well, we know what dummies would do. They would buy it. But use, utility, yes, the token had utility. If you said use, utility, wide scale adoption in 2017 and 2018, great argument. Great argument. Hoop and Tony, if you'd be listening to me, probably half of the things I don't like go up. Look at how they bid up lumens. If you want to use arguments, make sure you use all the arguments. And when you put use all the fucking math. Don't use a little of it, use all of it. There's a lot of companies that I don't like that went straight up until they disintegrated. Were you invested in were you in Celsius? Straight up till it went down. Were you in UST? Straight up till it went down. Do you have money at 3 Arrows? That shit's gone. Do you have money at FTX? All your shit's gone. Come on, bro. And it's also, buddy, it's not in the moon. It's not in the moon. It hasn't even gotten back to its all-time high from 2017. That's not mooning. The fact that something collapses and goes back, that's not mooning. You guys got to get your shit straight. Look, everybody can do whatever they want and they can invest in whatever they want. Just because you have a sketchy, scummy team, look at the price of Luna. Look what Luna did. Almost everyone knew that was a scam. you'd have to be really stupid to not. I mean, even engineers at Luna admitted openly that they couldn't pay those rates, 20%. They said they could pay 3.5. Why? Because they could park their money in government treasuries and roll them over, take a tiny fee, and they could pay you what the treasuries were paying. That's all they could guarantee. They said that like on a clubhouse room, one of their technicians, one of their engineers. Everybody knew that did any math, Luna was a scam. It was the same thing with Celsius. You could just tell something was wrong. It was pretty obvious. It was really obvious FTX was a scam. I don't know why people got clipped on that one. So just because something's a scam doesn't mean that it won't go up. Just because something's a bad project. There are hundreds of thousands of tokens in the crypto space. 99.9. This is the one thing that Gary Slappy Face Gensler and I, we agree on. 99.999% of crypto is a fucking scam. They want to steal your shit. It is a giant fucking garbage rug pull. All of it. And, you know, it's you got to also say, do I want to be right or do I want to be rich? These things inform you. You might know something's a scam, but you invest in it anyway because you think, what would dummies do? You know what? There's a lot to that. Right now, XRP is going up because dummies are supporting it. Cool. I hope they at least get back to par. I mean, I hope they at least get back to 392 or whatever so that people can get their money back. Whatever happens beyond that, it's no different than people investing in meme coins. It's no different than meme coins. There's zero use. What is the use utility? What is the use and utility of Dogecoin? People have gotten rich off Dogecoin, buddy. I mean, many, many magnitudes rich off of Dogecoin. Embarrassingly, the guy that created Dogecoin doesn't own any Dogecoin. He got rid of it because he actually got mad that people were bidding up the price because he was like, that's not what it's meant for. Da, 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 da. So he got rid of his tokens. So, I mean, and, you know, I'm not trying to convince anybody of anything. All I'm trying to convince you of is the story. The story is the story. What happened is what happened. As long as you know the story, you can invest in anything you want. If you know, look, if you knew Celsius and all those guys were crooks, but you invested in it anyway and you made some money, cool. People probably made money in the early days. Same thing with Luna. If you knew those guys were crooks and you invested in it, going into it knowing it was crooks, that's okay. You made your money, but you know what your risks are. But don't invest in something and don't know the risks. And also, it's a weird kind of counterfactual art. Well, you say it's a scam, but the price goes up. Yeah, look at the price of all these meme coins. Most of them are scams. Most of them are rug pulls. And what? The price goes up. And some people sell and they rug pull and the price goes down. And 99% of the people lose money and 3 people get rich. That's not a justification. It's not like because the number goes up on something, it's got to be good. No. So I got really rich by looking at the teams, looking at the timing, doing the 5 T's, right? And I've stayed consistently rich by not buying into people's bullshit. Have I sold stuff early? Of course. No one calls the top of any market. One jackwagon makes one trade, and that's the top of a market. And then it gets whacked. And one jackwagon buys at the bottom, and then that was the low. And everybody else pays a little bit more. No one consistently knows what the price. If anybody knew any of this shit with certainty, they'd have all the money. So I guess it's a good thing that today we're going to talk about cognitive bias. The five most kind of influential cognitive biases related to finance. I thought it would be good for us to start going back over those again, because I see in bull markets is where you see a lot of less than intellectual behavior. Let's just say that. Less than intellectual behavior. And right now we're seeing a lot of very low IQ, YOLO, I got to catch up, kind of dumb. This is dumb money. So it doesn't excuse bad activity. What happens. So there you go. I mean, I bought XRP at 0.2 of a cent, not two pennies, but 0.2 of a penny. So 5 for a penny. And I think I sold, I don't know, somewhere between $1 and $2. So I'm good, man. I had a similar, I did even better on Lumens. On Lumens, I got for less than a tenth. I got for like 12 for a penny. On XLM, sold XLM at 99 cents, somewhere right around $1, about 99 cents. So you can do the math on that. I bought Bitcoin at $692. I bought Ethereum at $17, like 17 and change, somewhere between $17 and $18. I bought Cardano at an average of 2.7 cents. I bought AGIX below 4 cents. It was, back when it was called AGI. Then it went to AGIX. Oh shit, there's a whole bunch of those ones that I don't own anymore. Neo I got, it had a different name, it was called Ant. I got that one at 99 cents. I sold it at like 58. I sold some of it at $58, some of it close to 100. I mean, if you were early, you minted money. So I don't give a fuck what XRP does, bro. I'm cool with it. I hope it goes up for the sake of the people that got stuck in it. But you better know the story, like you had better have known the story of these other scammy projects, so that if it goes the other way, you can't sing your sad fucking song. Oh man, I bought in at 4. If it's selling right now, then that means people are buying right now. They're buying it right now at this price. What happens when it goes the other way? What happens if they have to pay this fine? Oh wait, no big deal. They'll pay the fine by selling XRP to pay the fine that they got for breaking the law. What if the fine is bigger? Oh, they'll just sell more XRP to pay the fine they got for breaking the law and getting rich on the neck of the XRP investor. And if the argument is, well, number go up, okay, if that's enough, but you'll never stay rich and you'll never stay wealthy if that's the way you look at things. Because you're getting the wrong message from the information. And so it's kind of like a short-term gamble, like somebody gambles and they the first time they've ever gambled, they walk in the casino, they throw some money down and they win, and they sit back, they say, I'm good at gambling. There's no such thing as good at gambling. There's just gambling. So if you're getting your feedback is because price, you're fucked. You're never going to get it. You're never going to get it. I've had this discussion with private equity people, and I've had this discussion with bankers that you're getting the wrong information. None of us are good at this. What's good is doing research and finding some way to take these assets that are really weird and mostly spammy with slimy executive boards and try to figure out, look at the team, look at the timing, look at the technology, look at the tokenomic structure, and look at the the overall token utility. Then, do you think it can achieve use utility, wide scale adoption? Will there be a hoarding effect? Will there be what are dummies going to do? That's it. Then you make your investment, and then you've gambled. You've still gambled. You got to be honest with yourself. You're still gambling. It's all still gambling. I mean, So is getting on the highway in LA. That's a bit of a gamble, but that's kind of how it goes. Let me see. Am I wrong in thinking that every trade someone is taking a loss and someone is gaining? No. In every trade, you don't know. For instance, you could be buying at so you're buying Bitcoin at 50,000. Someone is selling at 50,000. That doesn't mean that they're losing. It doesn't mean that you're winning. You've decided for you that your value proposition is that you want to own this asset, and $50,000 seems fair to you. Now, you look forward. If you could look forward in time, you would realize, hey, 50K, that's a good deal. I mean, you could have bought it during the summer. It was in the 40s. It got in the 40s and 50s and just kind of floated for a while. You could have bought Bitcoin for 40. Matter of fact, there was a point this year you could have bought it for 37,000. I know this because when Brandon and his wife and I were going to the Getty Museum, I bought Bitcoin at 37 or 38,000, 37, 38, right around 38,000. And then we went to the Getty Museum, which was awesome. And then fast forward a year later. Now, so let's go back to your example. You bought your Bitcoin for 50K. You don't know who the winner or loser is because you don't know their situation. Are you buying Bitcoin to cover a short position? you might be losing. Are you investing in Bitcoin because you see a future in it? There's no way to tell until time has to tell you whether you're win or not. That other person, what if they bought Bitcoin at $1 a token? We wouldn't be calling them losers. We wouldn't be calling them losers. So, it all is based on when and where, when they got in, what was the price, where are they in the money, all that kind of stuff. You can have situations where there's a domino of continual winners. When you have an asset like Bitcoin that kind of melts its way up, like on a regular basis, and it just keeps melting up, especially if you back out. As it melts up, you have continual winners that are exiting to the sideline some of their profit. And taking profit on a regular basis is healthy. At some point, you have to convert some of this stuff into real stuff, right? Some of these electrons have to be converted into something that would meaningfully change your life. Or else, what are you doing? Like, it's cool to have all this stuff. I've got a lot of crypto money floating around in the ether, but it's not real money. I can't put my hands on it. It's not real money until it is. And unfortunately, right now, the way until it is means taking profit into stablecoin, pushing that stablecoin into a regular fiat currency and pushing it into a bank account, or pushing it into some lending platform that does that for you, or pushing it into the real world through some payment gateway that accepts crypto for payment. So, and there are some, a BitPay, you can go buy any of your exotic cars now, you can go buy with crypto. For the Nightingale, that Rolls-Royce Nightingale, the super secret one, we paid for that in USDC. Our down payment, not the whole car, the down payment, USDC. Let's see, I've been dead wrong about XRP. I haven't been dead wrong about it. I'm not a predictor of the price. I've never predicted the price. So, Diesel Hound, I have not been dead wrong about it. I have just been telling you what I feel about it. You know what? Maybe what you ought to do is everything I don't like, you should buy it. I want you to see how that turns out. Over time, my guess is that won't turn out so well. Anyway, but people got rich off meme coins, and I don't like meme coins either. So no one has all the answers. If anybody had all the answers, bro, they'd have all the money. They'd have everything. But I'm going to bet if we compare our balance sheets, I bet they look different, Diesel. I bet they look different. And having a lot of time in the crypto space, there is value in that. You need to have probably been through a lot of these ups and downs and you need to see these guys come in, leave, get indicted, go away, blow up projects, start new projects. When you see enough of that, you will get some crypto wisdom, and it is what it is. It is what it is. Okay, let's talk about some cognitive bias. Oh, we'll take a quick. Should we take a look at the markets? Should we take a look? Let me see. Is there anything exciting going on? Let's take a quick look. I think it's a bit of a retrace from yesterday, because last night things were really good. Let's take a quick look, and then we will do our Brainiac stuff. Okay, let's go with markets music. Okay. Oh, you know what? It was retracing this morning. I guess it's back. Okay. Bitcoin, flat-ish. We'll call it flat. Half a point is not much. Of course, you got all your TA guys saying this is the line in the sand. Bitcoin has to get past this. If it doesn't get past 100K, it's over with, man. It's over with. I don't know. I don't think any of that's true. I think we're going into many years of overall good markets, because we got many years of a different frame of mind. Out with Biden, in with Trump. It's a big deal. It's like the best deal that could have happened to crypto people. Ethereum was over 3,400 yesterday for a bit, but still, that's nowhere near its all-time high. It's been laughably underperforming. Let's see. XRP up. Why? The community is strong. They are dumb, but they are strong. So good for them. They got to get back to 3. They really got to get back to the all-time high just so that people can break even. I hope they do. I'm not wishing against any of these projects. I hope everybody that invests money, I want you to win. I don't want anyone to lose money. I don't like it when people steal money from us. So that's kind of where I'm at as far as that. Will I invest in it? Fuck no, because it's a sketchy ass team. But that doesn't mean I'm mad at anybody else for making money. Make your money, bro. I've got enough. My cup runneth over. I'm not hating on anyone. I'll go fucking cry myself. I'll go cry about my lost profit potential in XRP in one of my in a car that has an impronounceable name. How about that? All right. Dogecoin. Dogecoin's funny. It kind of tracks with Elon Musk making kind of chats about it, stuff like that. I don't know that there's ever a future where Dogecoin is back around its all-time highs again. I just don't know. I mean, I don't even know if dummies are that dumb. Now, could a bunch of companies, for some weird reason, start accepting Dogecoin for payment? True, but you still wouldn't hold Dogecoin, because simply being able to use a token for payment, it's still got to be kind of put up against a stable asset. People aren't pricing things in Doge. You don't think in terms of Doge. You think in terms of US dollars. And Chris, the best way I found, I go to CoinMarketCap. So you want to also go to their website, look at what they say, and they'll have their little LinkedIn bullshit, and then go to CoinMarketCap and look at what they say. And then I start typing in, now to ChatGPT, I say, XYZ token team involved in scam, and just see if anything comes up. I want to know if these guys are involved in anything sketchy. So I attack it that way. And I just between like Google, ChatGPT, CoinMarketCap, and then whatever they say on their website, I'm just trying to get a sense of the team. I mean, it's like anything with a resume. They're going to tell you what they want you to hear, but you might find out, like, if this guy came from another company where he was not good, or he left for kind of some weird reasons or something like that. It might raise the flag. Like Mark Novogratz got fired out of his own fund before he started Galaxy Fortress. You go look it up. Oh, by the way, he also got relieved of duty when he was at Goldman Sachs. So you start going, oh, wait a minute. This guy got punted from Goldman. He then got, and Goldman it's a bunch of scumbags. So you get fired from Goldman, you've got to be just dirt. And he got punted from there. He got punted from his own fund that he started. He got punted by his partners. So that tells me probably drugs or alcohol. It wouldn't have been it wouldn't have been a theft thing. I don't think he's a thief. I think he's a junkie. And maybe a recovering junkie, but he's a junkie. It's what it seems like. So then when he starts Galaxy, I don't like Galaxy. Why? Because it's run by a dude that got fired from fucking his own fund and Goldman. I'm not going to give that motherfucker money. That doesn't make me a hater. Also, if Galaxy Digital does good, I don't get mad. Good for fucking Mark. Good for him. He went to a little hack session with the Winklevoss twins, and he bought 1 million Ethereum or something ridiculous back when it was like $2. I don't know what the price was. It's like $2 or $3. It was something ridiculous. He didn't know shit about crypto. He bought early. He got convinced by the Winklevoss, and it made him richer. It made him real rich. And so, like, okay. Then he goes out there and starts telling everybody about crypto. Well, wait a minute, Mark, buddy. 6 months ago, you didn't know what the fuck crypto was. Don't go out and act like you're some cult leader now. Like, fucking dial it down, bitch. So I don't like those kinds of guys. Those guys bother me. The Brads, the Chris's, the Novigratzes, the Do Kwons, the Alex Mashinskis, the Kyle Davies, the Zoo Shoes, the fucking, what's the BlockFi guy? Scumbag. I don't like these dudes. They are snakes. They're fucking dirty. None of you, even the dude that's like the pro XRP dude, none of you would let them drive your kids to school. No fucking way. Because they're dirty. So like, oh, but he's making me money. Is he making you money? Do you have 100 million XRP? You're getting good. Every morning you wake up $1 million rich. Bullshit. Like wise up, dude. Don't use self-serving arguments to ameliorate sketchy behavior. Yeah, the Ben and Charles thing's frustrating. Let me get through this list. That we could go down that path. Charles is not dirty. Charles is broken, man. Charles is like a broken man. He's just a broken man. He's super smart and broken, and that means probably mostly useless. Not completely, because he's still got a brilliant mind, but he's mostly useless. He just built roads to nowhere. He just continued to build roads to nowhere. And, ADA, the token, there's another one. People bought that. That's a whole other thing. Listen, I hammer them too. There's a whole bunch of people that bought in. Someone bought at $3.09. Yes, based partly on Charles prognosticating. And they got yeah, but he's still a billionaire. That's right. He still sleeps okay at night. That's the other thing. These scumbags, they will create these cult followings. They'll tell you anything they want, and then social media will start pumping these things. You get these little community groups. These groups, they can't see the forest for the trees. They get sucked up in the dream. I have these tokens. These tokens are going to go to this price, and I'm going to be rich. No, man. That's just not how it works. There's no cheat code, man, unless we're all in a simulation and each one of you has a different version of this where you do have a cheat code. Like, maybe I thought about that the other day. I thought, wait a minute, what if the fact that I'm successful is not because I'm good at any of this, but just because I'm in my own simulation, and in this simulation, when I first put my quarter in or whatever my payment was, and I put on the goggles wherever I am, the deal was like, oh, you get to win at finance after this many years of life. It's going to be an exciting journey and all this. I'm just playing out some sim, and all you guys are NPCs. Maybe, but if I don't know any difference, if I don't know any better, I still have to proceed as though I have some amount of choice. And if you have choice, don't back these sketchy motherfuckers when there's other good projects that you can back, and you can still make money on both. You can make money in good projects. It's not like The only way to make money is sketchy projects where the people have been indicted or in some level of the executive or judicial branch is going after them, or whatever. Like come on. All right. So Cardano, good. It's going up. Great. I don't know why. No one else probably does either. Have they done anything different? No. Are they releasing anything new? No. Are we ever going to get this privacy coin? Who knows? Midnight. Anyway, Sui has not recovered. I thought it would recover better. It hasn't, but it's gone on a pretty good run thus far, so I'm not a hater. Uniswap doing pretty good. Aptos kind of floundering, but up from it's kind of low. It got clipped pretty hard. Remember, it was up in the $14 to $15 range. I think it'll do fine along with Sui. VeChain up above a nickel. Where does it go? Who knows? That's a tricky one. That's probably one we might talk about tomorrow a little bit. VeChain's tricky. Monero, I only watch it because I watch privacy coins because I want to see what privacy coins are doing in the market. I originally wanted to see what they were doing because I thought that might make a difference when midnight drops, but Charles can't find his ass with both hands, so who knows if midnight's even going to ever be a thing, or are they going to miss that boat too? You didn't get banned, Howard. You're right here, buddy. Ain't no one getting banned. I don't ban anybody. The only guy I banned was the dude that was doing those porn things. Like, he was like, go to my website, look at my porno things. I was like, wrong thing, man. Wrong string, bro. Okay, Algorand going up. Why? Who knows? Why did it go up 35% yesterday? Sentiment. This is part of the sentiment stuff. XRP's going up on sentiment. Algorand's going up on sentiment. Cardano's going up on sentiment. There's no fundamental reason. Like, would you invest in a company a day after they got indicted by the Justice Department? Does that seem like a reasonable math-based decision? No, come on, bro. Come on. So anyway, there's a lot of sentiment trading going on. Unfortunately, it didn't propagate down to Cosmos. Biocoin's still a little bit low. It had a sell-off, but it's okay. It's about flat for the year. There's money to be made there. Optimism up. You get it. You guys can see all this kind of stuff. There's not really – the only standouts are the sentiment trades. So, yeah, I mean, good. If you're in them, be careful. Take profit. Be smart. Ask yourself, is it reasonable for the prices to be moving the way they are based on what they're offering society? I would contend we are seeing pro-Trump, pro-future, very optimistic sentiment. Sentiment's powerful, right? So it can still make you money, but I would definitely have a lot of awareness on where I would like to be taking my exits on projects that don't really have a clear, foreseeable future if you don't inject conspiracy theory. Like the people like, oh, Cardano, they have all these secret deals with, no, they don't. Nope. Well, XRP, the people at Ripple, they're going to flip the switch. No, they're not. There's no switch, man. There's no fucking switch. Their own partners don't work with them, right? Like they own part of MoneyGram, and MoneyGram doesn't use XRP because it didn't make them money. Like, don't take my word for it. Like, you don't have to. Like, come on, man. So, like, I hope all of you, this is why we're going to talk about cognitive bias. This stuff is important. You may get lucky here and there. You may have a trade that works here or there, an asset that goes up, that contradicts reality or whatever, and that's great. But that's not a teachable, repeatable strategy that you can employ across diverse assets. I don't know shit about real estate, but I've made already money in real estate, right? There's a lot of things where if you can reduce them to game theory and you can look at simple arbitrage situations, you can make money. I don't really know shit about cars, but I've made money in cars, in exotics. So it's the framework for your thinking. So it's having good game theoretical and then having a good game theoretical baseline for the way you think and understanding cognitive bias. If you don't understand cognitive bias, you're going to be plagued by it. You will always be mentally handicapped. You will be the kid on the little yellow bus, because no matter how well you game something out, your cognitive bias will get in the way of you actually doing anything to fruition that makes you real money. I don't care about, it's not that I don't care about your lives, but I don't really care about the rest of your life. But I do care about your financial life. You're going to have to manage your own shit on your own. But what you can affect is you can learn good game theory, and you can be mindful of cognitive bias. In fact, I'm going to find my little cognitive bias banner before we jump over there, so that everybody can kind of be mindful of here we go. All right, let's go. Let's spend about 10 minutes filling our brains with the 5 most relevant cognitive biases as it has to do with finance. And of course, some of you probably have no cognitive bias. You've never been affected by it because you are, master stoics, like you and Marcus Aurelius, and you guys walk hand in hand. For the rest of us, we got to be mindful of this stuff, because it can get in the way of rational or sound judgment. And that's the key, is these biases, no matter how good your baseline thinking is, these biases will lead us astray. We will have considerable and repeated systemic deviations from rational thought, right? We don't want that. You don't want to have a good base of thinking and then blow it all out of proportion with a bunch of perversions from your cognitive biases based on the way you were raised, where you lived, your indoctrinations, your culture, all that. You got to push all that shit out. So that's what we're going to talk about right here.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right. So let's talk some cognitive bias. Let me pull up my little cool guy thing here. All right. We believe, many of us, that our decisions, especially our financial ones, are purely logical. Like many of you, even today, have voiced arguments, and it's good. You got to get this stuff out of your system. You know what? Sometimes you got to purge the bad. You got to purge the evil. If you think that your financial decisions are purely logical, you are wrong, period. Research has shown very conclusively that our emotions, our expectations, and our subconscious, this belief system that we have subconsciously, meaning you don't think about it, but it affects your decision making in real time. It plays a huge role in how you spend, how you save, and how you invest, and also all the little mental discussions you have around spending, saving, and investing, right? So we're going to talk about the 5 most powerful cognitive biases that will influence your thinking in a bad way. Confirmation bias, okay, anchoring bias, loss aversion, herding or bandwagon bias, and overconfidence bias. And I think I've seen every single one of them in the chat today, which is good, because this is something we can tackle. Unless the XRP guy's going loading up on more XRP. Go sell some blood plasma. Go sell a bunch of blood plasma. Grab you some XRP. To the moon. Man, I have a buddy of mine. He texts me every day. Buddy, look at it. It's going up. I'm like, yeah, I know. Buddy, I know. It's good. It's going up. I'm glad it's going up. He goes, it's going up. Like, you understand that, but XRP going up doesn't somehow, it doesn't affect my net worth. It's still good. Like, I don't care. I mean, I do. I care in a positive way. I want XRP. I want all this stuff to go up. I would love it if everything in the crypto space went up and everything in the equity market shit the bed. Of course, you can't have both, right? Because there's correlation. Anyway, confirmation bias. I want everybody to write it, or just the people that think that it might actually be a part of your, cognitive bias repertoire. Cognitive bias. This is our bias, or our tendency to look for and favor information that confirms our existing beliefs while disregarding information that challenges them. So, like in an example, you might say, hey, I like XYZ coin because it's going up. And you might disregard, the fact that they owe potentially $1 billion in fines, that they may or may not have both of their executives indicted for fraud, that they are currently at war with the SEC. I mean, you might ignore those things, and that's fine. But understand that if you're doing research and confirmation bias is a part of it, then your research is already flawed before you even start, because you'll end up just looking for research or information that backs your already held beliefs, right? So if you believe that a certain investment, like a trendy new project, trendy new token or whatever, is a guaranteed success, then you will pay attention to the headlines, the news, the Twitter feeds, the scummy YouTubers with their little fucking XRP to $7,000 fucking, thumbnails. Like, you're going to look at the stuff that supports your viewpoint because it makes you feel better about your potential big future with this thing. So when you get excited about a big purchase, right? Like a car or some expensive piece of tech, you might not notice social media posts that are contradicting. Like, you say, oh man, I love this car. And then there's another article like this, why this car sucks. Like, I'm not reading that shit. Tell me about why this is the best car ever. There's 17 articles that say if you buy that car, you're throwing money away. No, I want the one article that says it does burnouts. I can do burnouts. Oh, well, okay. So, you will start to notice your social media posts, your articles, things like that tell you all the good things, and you ignore all the bad things. You ignore the warnings. It's kind of like, you never see dentists until you think, oh, there's a dentist over here. And then for the next 2 hours you're driving around, all you see are dentists. You're like, shit, dentists are everywhere. Well, your brain was just tuning them out. And that's what happens with confidence bias. You tune out anything that contradicts what you have decided that you believe. And the other thing too is you can't have a position that is so solid that it can't be flexible. And everybody should be open to being wrong and changing if the information demonstrably changes. So how do you overcome this? Because confident, like, this is the bias that almost everyone has that colors their decision making. So you need to seek out opposing views. So if you're convinced that you found the perfect investment, the perfect token, look specifically for sources that criticize or question it. Find the detractors. Ask critical questions. So challenge your own assumptions too. Ask yourself, is there a strong reason that I might be wrong about this? Right? So I got to ask myself that too all the time on all these tokens. I got to challenge myself. Am I wrong about this? I was super pro Cardano, but Charles changed. And so my opinions had to change with it. They just had to. I didn't have a choice. Your decisions need to change when the information changes. Does that make sense? And then, use data and experts and some fucking common sense, right? Rely on solid, reputable research, not Tika. And rather than, your gut feelings or posts on X or a bunch of fucking yahoos on YouTube, they're telling you that you're going to be rich by this time next year and all your fucking hopium and your dopamine and shit go to the moon. No, man, stop. Would you go to a doctor to perform surgery on you if he was just like, hey, this is Mr. Smith? I was like, whoa. Mr. Smith? I need Dr. Smith. Oh, yeah. Dr. Smith's no longer with us. This is Mr. Smith. What the fuck is he good at? He's good at Scrabble, and he plays Sudoku. Sudoku? He plays Sudoku. I'm like, he's not giving me nothing, not even pills. You don't have man. Anyway. So if you're actively searching for different perspectives, then you'll be able to make more balanced decisions, and you'll just to be able to avoid tunnel vision. And that tunnel vision is mostly caused by confirmation bias. And if you use price to make your determination, for instance, if you look at a project and you've done all the homework, but price is what's telling you whether something's good or bad, the price action, the price going up or the price is going down, it's bad. Price is going up, it's good. You are getting the wrong information, bro. Man, you are lost. And it is unlikely, and again, people can change their attitudes and they can reprogram, but it's unlikely, if that's the way you're wired, that you will ever have anything that even rhymes with the word wealth, because you're not going to have health, because you're not going to the gym every day. It's because you don't see immediate rewards. So that's out. So, I mean, like, anyway, let's talk anchoring bias. All right, anchoring bias. This is what happens when we rely too heavily on the first piece of information, the anchor. There was a bunch of primacy versus recency kind of psychological tests and population tests and things like that they did. I remember reading a lot of papers. This is a while ago, but I read a lot of papers about primacy and recency. Also, when I was reading about tyranny of choice and analysis paralysis, right? So, but the anchoring effect is legit. And so what happens is our decisions and our estimations are shaped around the initial number or the initial fact, even if it's arbitrary or outdated. So if I'm using 2017 facts to make 2025 decisions, I'm an idiot. And I have fallen into this anchoring effect. So people say, quit living in the past. Yes. You cannot live in the past, especially when it comes to facts and data. So why it matters, like in finance and investing, is because on the negotiation side. So if you see a car listed at a higher price, then that becomes your anchor. So even if you manage to haggle the price down somewhat, you may still overpay if you think you've scored a discount from the initial anchor. The price doesn't mean anything. What means, it's the value to you in monetary terms at this moment. That's what anything's worth. The value to you converted, because value is a nebulous term. The value to you converted into currency units at this moment, that's the price, not whatever's written on something, and certainly not what it was years ago. Salaries. Think about this. The first salary you ever earn can act as an anchor for your expectations about future earnings. And this can limit your willingness to negotiate aggressively in the future. This is happening a lot right now, where some jobs in tech, some are going away because of AI, but some AI tech jobs, the salaries are massive. And so what happens is you say, oh gosh, well, I got paid $200K at my last job. They're offering me $250. That's amazing. No, buddy. The average person coming in is coming in at $350 plus stock options. What the shit? Yeah. You don't get anchored in old stuff. So you need to kind of steer around this, gather multiple reference points, right? If you're going to buy a car, go to car gurus, look at the market value, check reliable sources, figure out what wholesalers are selling it for. Think carefully about each situation as being its own unique game theoretical game. It's its own game. Every situation is its own situation, its own game. It's unrelated to others. So your first salary out of high school, you got $40K a year. You're like, woo. Well, now you're on the poverty line if you make $100K. You're in the soup line. Get government cheese. So remember that time dictates what an offer should be. Time tells you what value should be converted into currency units. Avoid letting the original figure or those early figures, avoid letting original or early figures shape your decision making. That makes sense? Don't let it affect your career's, your personal earning potential. All right. And then stay open to updates, changes in markets, changes in company policy, changes in company executives, changes in their behavior. Don't let old assumptions guide your new ones. A company 7 or 8 years ago, it might not be the same company. There might be a lot of realizations and realities that have set in. Things change. So recognize that the power of the initial anchor is legitimate, and be aware of that. Don't get anchored in old data and old news and old facts. Old facts ain't facts. All right. Next, loss aversion. Loss aversion refers to our tendency to feel the pain of a loss more than the pleasure of a gain, right? Like winning the games, like it's okay, but losing is the worst, because we hate losing more than we enjoy winning. Why? Because dying is pretty bad, right? Staying alive is good, dying real bad. So evolutionarily, this makes a lot of sense. It's kind of an obvious one. In finance, it will screw you over because it will create hesitation to invest. It may make you start making risky decisions during a downturn. Like when the markets go down, you start kind of over investing. Like if you're holding on to losing investments for too long, you're not reshaping your portfolio. It's going to bounce back and all this, but maybe the information has changed. Why? Because you don't want to lock in the emotional pain of that loss. You're like, I'm not taking a loss. I have one right now. I will not sell flow. It's the biggest loser I've ever had. I don't even have a big position. It was never that big. But I don't want to take the loss. I probably should book the loss. I booked the loss right now. Actually, I probably should book the loss. Well, it won't matter now. I should have probably done it last year. But anyway, the point is, I don't want the loss. I don't want to admit that I got my ass kicked on that one. So until I sell it, I haven't taken a loss, but I have, because I can't take that money and utilize it somewhere else where it might grow. You miss opportunities, right? If you're overprotective with your investments and you have this loss aversion, you're going to miss out on chances to expand your wealth, to learn about new projects, to try other things. So focus on the big picture. Remember that markets move in cycles. Short-term loss can be pretty normal, and then it's necessary for greater long-term gains. No one's going to call everything correctly, because if anybody knew all the answers, they would have all the money. If you do better than 50%, great. Set clear goals and limits. So you need to think about how much you're willing to risk for each of these investments before you pull the trigger on the investment, and have a plan to handle the losses so that psychologically you can keep your emotions in check. They shouldn't be a part of investing at all. And then celebrate measured risks, right? So practice taking small calculated risks. And over time, you're going to get more comfortable with accepting that some modest losses are part of a successful financial journey. There is just no way around it. So understanding that loss aversion is real helps you remain objective when you see dips in your portfolio and setbacks and things like that. Your portfolio looks red and you're like, I hate the world. And then it's green. You're like, I'm happy again. You're like, well, what's going on? Herding effect. What is it? Herding bias, or some people call it bandwagon, is our tendency to follow what the crowd is doing. This is what would dummies do? What would dummies do? Because none of these people that are talking about how amazing XRP is right now, none of them would open their fucking mouth 6 months ago or a year ago. They were dead ass silent for years. They didn't say a fucking word. And now the price is going up. Woo woo. I didn't hear you woo woo in the last 6 years, bro. So be careful. Don't follow the herd. What you will be led into is off a cliff. You'll be led into market bubbles. Also, don't copy what your friends are doing. A lot of times people get tempted to buy the same things that their friends recommend. Just ask your friend, hey bro, are you rich because of this? Not simply because they're rich. They might have gotten rich off real estate. Now they're telling you to invest in stocks. Whoa, red flag. Don't touch me there, Scoutmaster Steve. Friends don't give friends financial advice as far as specifically what to buy. Friends wouldn't do that. Friends would teach people how to understand finance. That's what a real friend will teach you, what finance is and how the gears turn. A friend won't say, buy this, this, and this. That friend is an asshole, period. You need to find out if the things that you're investing in align with your financial goals. Don't think because your buddy just bought. No one buys cars. If your buddy leased, rented, or whatever a new car, that he's just crushing it. And what are you doing, bro? Probably what he's doing is already done. So anyway, don't copy friends. And then try to stay away from FOMO. There's a lot of FOMO going on. And what happens is when you FOMO in, what do? You link up with some cognitive bias. You start reading self-serving articles and telling everyone else you know, oh my God, it's fucking going crazy. It was go straight to the moon. Okay, buddy. I hope you're willing to give all the people that you said it's going to the moon the discussion if it don't go to the moon, if it retraces, if it pulls back. if it grinds down to zero or whatever. I hope you're ready to go and give all of them a nice warm hug, a nice mea culpa. Anyway, do your own research. Think long-term, not short-lived nonsense. Admit when you don't know something and go look it up. What does it take? A few seconds to go look a word up? A few seconds to go look up a financial term? Just go. Go look it up right then. That second. Go. Resist the urge to jump on the bandwagon and control and have some measured control over your own financial path. If you jump on the bandwagon and made money, you're going to give it all back anyway. You don't know what the fuck you're doing. You didn't do anything. You just followed a trend and made some money. Guess what? When the markets turn, you're going to follow that trend too. You're going to give all that shit back. That's why people talk about investing being veterans waiting for amateurs to hand them all their money. It's people don't win over and over accidentally. People also don't lose over and over. Those are habits. Winning is a habit. So is losing. Anyway, finally, overconfidence bias. Overconfidence bias it describes how we tend to overestimate our own abilities and the precision of our knowledge. Ben Gortzel. In finance, this often shows up when people think they have a perfect sense of the market, or they take 3 weeks worth of information and they assume that, luck is going to favor me more than other. I'm due. The gambler, like I've lost so much, I'm due. Why? Why are you due? Some people lose everything and keep losing everything. What if you're due to lose? So luck is a funny term people put when someone accidentally wins. Yeah, you pick 6 numbers, you win. Good luck. I hope that works out. Luck is not a strategy. Luck is not a teachable, repeatable skill. You don't train someone to go out and be lucky in the ring. Hey, listen, go out there and just get lucky. What? Get lucky, bro. That guy's he's gonna punch me in the face. Now, don't worry about that. You're gonna be lucky. That's not a good coach. That's a bad coach. So in finance, you'll make poor investment choices because you might believe you can pick winners with ease, or like the person that comes into crypto for 5 minutes. They buy 3 coins. They read off of Twitter. They go up. Now they're giving advice. You're going to see this all over the place. This is going to happen a lot. And it is in a bull market. It happens. It's fine. The rest of us are like pulling money off the table as these jackwagons are giving advice. But anyway, when people don't understand the complexity and the randomness and the fluctuations of markets or how the gears turn, they're going to lose. It's just a matter. It's a win, not an if. When you ignore expert advice based on overconfidence, it leads you to dismiss the guidance of, people that have some experience, accountants, financial planners, more experienced investors, because you think you know something. None of us know enough. We always have to leverage people more experienced than ourselves. You don't have to agree with it, but you have to leverage their experience. Beware the old soldier, right? Why? Because he got old somehow. If he's still carrying a rifle, that motherfucker is dangerous. So keep it in mind. And then overconfidence bias will have you misjudging risk. So when you think you're going to always outsmart the market, you may take more risk in your trade expressions than you normally would, and you may take on leverage. So just be careful. Stay humble. Try to diversify your portfolio. Learn continuously. You will never stop learning. You will continue to expand your financial literacy forever because none of us get to retire ever. So this isn't something. The reason you want to get good at this kind of stuff is because you're going to be doing it forever. You don't ever. I hope that part makes sense, right? You guys get it. We talked about this the other day. None of you ever get to fucking retire. Ever. Because if you do, you're broken. Because they print money so fucking fast that you can't keep up if you retire. So you guys need to get good at this stuff forever. And part of that is just knowing that you're going to always be continuously learning. And if you're okay with that, you can just keep learning, make good decisions, be aware of these biases, confirmation, anchoring, loss aversion, herding effect, bandwagon, overconfidence. And in just those 5, if you just tackled those 5, you're going to have a huge advantage among your peers. And then you'll find yourself saying a lot less stupid shit, which is going to be great. And you make more money, which is also great. Well, you make more currency. I don't know what kind of money you're going to have. But you make more currency units, and that too is great. So, yeah. Oh, I'm not listening to that old guy. Why would I listen to him? Because he's old, dude. He saw 2 wars. 4 if you count Korea and Vietnam. Man, that guy's seen some shit. So anyway, yes. Stay in school. Don't do drugs. Don't do anything my poor and solvent drunk, struggling on meth grandmother or Brandon wouldn't do. I think he's still in Hawaii. So Brandon's living a good life in Hawaii right now. So the rest of us, we just have to suffer through. We'll see you guys tomorrow.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.